Financial Services today launched its standalone health insurance arm under Aditya Birla Health Insurance, which is a joint venture between the Aditya Birla Group and South African-based MMI Holdings. Aditya Birla holds 51% in the health insurance business. ED Now's Vijay Ganeshan Iyer spoke exclusively to Ajay, Srinivasan, CEO of Aditya Birla Financial Services.
So this is a 51-49 joint venture with MMI of South Africa. They're a leading financial services player in South Africa. And really what was most impressive when we went to see them was the innovative way in which they've been able to build out in the health insurance model. You know, the South African health insurance model market is actually quite different because you have to provide cover to everybody who applies for it, and the price has to be the same. And therefore there's a large amount of IP that's been built in terms of how you manage disease and how you deal with somebody in terms of managing their health over a period of time. So it's a very unique approach to health insurance which really appealed to us. A lot of similarities between Africa and here that we found that we could translate. So it's a 51-49 joint venture with them.
And Ajay, if you could ask you, health in that sense has been a tough business when it comes to India as a market because of various reasons, and we have very limited players who are on a standalone health business. So what is going to be your business roadmap, and in terms of the size of the market share that you are looking at, and a typical say health business in a country like India, what would be a kind of timeline that you look for a break even?
So let me first talk about what's different about us. I think most of the health insurance today is really like a Mediclaim kind of policy, which is really around indemnity products which deal with reimbursement of claims and hospital claims. I think we want to change that experience. We want to first talk about insurance for all. We want to cover people who are today traditionally not covered by the health insurance sector, people who have pre-existing conditions who typically don't get cover, healthy people who don't see the need to get cover because they say, if I pay the premium, what value do I get in return? So the first differentiation is that our proposition is really going to appeal to all Indians. The second thing that we want to do is really partner with our customers through engagement, through various forums, so that we can help them manage their condition. And this is what we do through an offering called incentivized wellness, where we work with our customers to make sure that they're constantly improving their health. Because if they improve their health, their claims go down, it's good for them and it's good for us. So it's good business for us and a very good outcome for our customers. And our whole method of engagement is going to be a completely different model of engagement. And I think that's what's going to be different. And when you talked about the industry being, penetration being low, one reason for that penetration being low is customers are not finding relevance in the industry compared to what they're looking for. And that's what we're trying to address.
And if my numbers are right, this would be the 13th business vertical that you have entered from the financial service. You did mention about the payments bank. How near are you? How soon do we see the launch happening?
So I think the payments bank, we're in the process of getting ready. We've got a number of things already set up, our tech platform, our teams all in place. So we're in the process of getting ready for launch. So sometime in the first half of next calendar year, you should see the launch of the payment bank.
Would payment bank's launch happen perhaps at a very interesting time that we are witnessing the whole of demonetization which has been announced? How are you looking at things?
It is indeed an interesting time I think for payment banks particularly, but definitely for financial services in general. Because I think the digitization process will gather momentum with what has happened, and I think we'll be able to hopefully capture the growth of the whole movement to digitized currency and digitized payments through the payment bank. But I also see with the kind of money that's going to come into the system, with the drop in interest rates, with potentially a much stronger fiscal deficit, I think you should see a much greater move to financial assets, and I think that should benefit all the products and services that we have in Aditya Birla Financial Services.
And from Aditya Birla Financial Services perspective, do you think next couple of quarters would be challenging? The business impacts have started happening indeed, and how do you see this lasting for?
So I think it's early to make a complete assessment on timing and how broad the impact is going to be. We clearly see this quarter is going to be a quarter of adjustment. For a number of people, it's going to be a quarter of adjustment. It's difficult to forecast whether that will spill into the next quarter or not. But I think it's going to be a bit of a tough time for various companies, especially in some sectors more than others, before you start seeing a turnaround. But I think you've got to look beyond that, because in my view, this is a great move, and I think ultimately the benefits are going to be very, very significant for India.
And particularly, are you seeing in the rural side the effects being more, and perhaps that is where a challenge, because you also have centers across the country, particularly the tier 3, tier 4 segments. So how challenging have been the things, particularly in the last couple of weeks, and are there any indications of things getting eased out with the kind of steps that have been taken in the last 2 to 3 days?
So we don't really have a pure rural presence like many other players do. We are in smaller towns through our life insurance business. We've seen some slowdown in collections initially. We've started seeing that coming back. Renewal premiums, some of it that was paid in cash, we saw a little bit of delay, but again we started seeing some of that come back. So I think there's going to be a bit of a period of adjustment. We don't know how long that period of adjustment will last before it comes back.
Okay, and my last question, I know you need to rush before. How soon could we meet again? The whole of restructuring process, any update that you would like to give?
So when we announced the restructuring in August, we said that the merger would get done in this financial year, and then the demerger of the financial services business would happen in the first quarter of next financial year. We're on track for that.
So FY17 is when we can expect the whole process to be completed as scheduled?
So FY17, the merger process will get completed, and then demerger will happen in the first quarter of next fiscal year.
Another EDNA exclusive, we had Ari Sarkar, who is co-president Asia Pacific at MasterCard, spelling out the company's strategy to counter competition and tap into the exponential growth opportunity arising from the demonetization drive. And now what we're seeing is remonetization on the ground. This was an exclusive conversation with Neha Botra.
Well, the demonetization drive is an extremely ambitious and audacious program that the government of India has embarked on, and we applaud this move to move India to a much more transparent, open digital market environment. I think if you really look at a few quarters out from now, there's obviously a lot of things being written about the current challenges in converting such a mammoth cash-based economy, which was kind of inevitable. And you can't think of a great process. You are invariably going to have some challenges, and we're kind of dealing with that. But overall, I just feel that it is very positive for the economy. It's a bold step by the current government. It is being supported all around, whether it is the common man on the street, whether it is the business community, whether it's the international community. I think India is being looked upon in a very favorable way. And our view is that once we get through the current immediate challenges, the teething problems of converting 86%, as you rightly said, cash in circulation to the new currency, it is going to have a very major impact of bringing more parts of the parallel economy into mainstream, and the impact of what it will be on asset bubbles and real estate pricing, bank rate financing. Banks are getting flooded with new money that's being banked with them. That will have impact on financing costs. So I think you'll see a very positive overall long-term effect is going to be very positive for the economy.
So as of now, close to 90% transactions are done in cash in India. So this really gives an idea of the kind of potential you have yet to tap in the Indian market. So what really is your game plan? What is your strategy? If you could spell out.
You're very right. If you really look at India, in our estimate, is actually 95% a cash-based economy. And what you have is an ecosystem that has developed fairly well from what we call a bank-led model. And the government's again taken some very ambitious steps. If you really look at in the last 2 years, the growth of Jan Dhan accounts and the fact that there's 300 million plus RuPay accounts, Jan Dhan accounts, there's MasterCard roughly around 200 million, and there's Visa with very similar numbers. You're really talking about 700 million plus people who are debit card holders in India. What is interesting is a very large percentage of, and this is roughly about 400 to 450 million, are actually active clients, active customers who are essentially transacting at the ATM. So a lot of the queues that you're seeing at the ATM is testament to the fact that there is a very large part of India which has now got the experience and behavior of going to an ATM. But when you look at true electronic payment usage, which is at point of sale or e-commerce, it's still very small. You're talking about numbers somewhere almost like 10 to 15% of the ATM volumes is what is in true electronic. And the activity rate is somewhere in that 45 to 50 million cardholders. So we just think that the headroom for growth for electronic payments is very significant. And if you look at the acceptance environment today, this $450 billion of cash is actually being withdrawn from roughly 190 to 200,000 ATMs across India. Now, the acceptance environment is 1.4 million terminals. So, 7 times bigger than the ATM environment, but the volumes of usage at the acceptance environment is only about $60 billion, equivalent dollars. So you're really seeing that there is a huge headroom for growth for electronic payments in India. Now there are a variety of issues why that growth has not happened. Some of it is to do with the taxation environment where, parallel invested, people don't want to come into the formal economy. But I think the push with the current demonetization is going to add to a completely new impetus where electronic payment acceptance is going to continue to grow, and where you have merchants and other traders who today have terminals, many of them have dusted those terminals out from their drawers and brought it on top of their retail outlets, is another case of why this volumes in the electronic payment market is going to grow. I also feel that the cost of acceptance and the cost of infrastructure of the physical terminal and the innovation in payments, whether it is a dongle-led model or just mobile-to-mobile based services, is going to be a huge driver for further electronic payment penetration. One can't ignore the fact that India, the banking system, has very large number of bank customers, large numbers of debit card holders, and that usage at physical points of sale, at MPOS, mobile as point of sale, as mobile to mobile payment capability will create a really compelling proposition. So you're going to see more of these physical cards going into the digital world and creating a much wider use case environment.